Tasha Keeney, an investment analyst at Cathie Wood's fund, RK Invest, and a well-known financial specialist on her team, will discuss her thoughts on Tesla's amazing growth and innovation potential in this video. Keeney is a rising star in the banking sector and a sought-after speaker at conferences and events thanks to her extensive understanding of cutting-edge technologies like robotics and driverless cars. According to her, the market is undervaluing Tesla and the threat it poses to established automakers, and traditional automakers like Ford should be worried about the waning demand for gas-powered vehicles and their lack of a strong autonomous alternative. Two significant events that might double Tesla's stock are discussed in this video, along with how Tesla insurance might upend the conventional insurance industry and increase car safety. Heaney thinks that Tesla still has a lot of space for growth and innovation, which makes it an attractive investment prospect for the future given its distinct market positioning and high demand. Watch closely as we go into this subject, but before, hit the like and subscribe buttons. Well-known analysts have given us their thoughts on Tesla. In this video, we will hear from yet another expert. Tasha Keeney is going to discuss her thoughts on this. A rising star in the banking sector, Tasha Keeney is well known for her in-depth expertise and perceptive evaluation of cutting-edge technologies. Keeney has committed herself to studying the most recent developments in domains like robots, autonomous cars, and artificial intelligence in her role as an investment analyst at RK Invest. Keeney has established a strong reputation in the sector because to her knowledge, and she is regularly asked to offer her opinions on financial news networks and in magazines like Forbes and the Wall Street Journal. In addition, Keeney is a popular speaker at conferences and gatherings, where she imparts her expertise and leads stimulating conversations about the newest technological advancements. Tasha Keeney is known as a thought leader in the finance sector, especially when it comes to disruptive technologies and how they might affect investment prospects because of her research and experience. Keeney will surely remain at the forefront of this fascinating and quickly evolving profession as the world changes and new technologies appear. She stated as follows, "Once more, I believe that electric vehicles are here to stay in the long run. Since gas-powered cars make up the majority of Ford's installed base and the vehicles they sell are on the decline, I would be quite concerned if I were one of the other traditional automakers. Additionally, they don't have a really good autonomous solution. They ended their endeavor," she continued. She also discussed the two significant occurrences that would soon cause Tesla's stock to double. However, I want to start by discussing some recent Tesla announcements that may have an impact on the company next week. Cyber vehicles won't be mass-produced in Texas until 2024. Despite the fact that demand is stronger than ever in manufacturing, is outpacing supply by a factor of 2, according to Tesla's most recent earnings presentation. This brings me to my first 2023 catalyst. With the growth of its insurance business, which is growing at a pace of 20% every quarter, Tesla has the ability to deliver up to 2 million cars in that year. I was wondering in the comments if you believed Elon had something else in mind, or if you thought we'd see a less expensive Tesla on March 1st, even though this new car might be the $25,000 Tesla that we've all been waiting for. Additionally, there is Tesla insurance, which need to be brought up but is sometimes overlooked because everybody who knows Warren Buffett is aware that the insurance industry was the foundation of his business decades ago. With aspirations to offer insurance in 45 states, by the end of 2023, Tesla insurance is now available in the top states in the U.S. auto insurance market, which is currently valued at around $300 billion. Tesla insurance is a revolutionary product from the electric car manufacturer designed to give Tesla owners individualized, reasonably priced coverage. Tesla is able to provide rates that are specific to the habits and trends of individual drivers by utilizing data collected from automobiles. Vital part of the insurance program is the company's autopilot system, which uses cutting-edge driver assistance technologies to lower the risk of collisions and support safe driving. Tasha Keeney discussed her opinions on Tesla Insurance's potential to be a sizable source of income for the business in an interview with Yahoo Finance. Keeney thinks Tesla has a distinct edge in the huge and expanding insurance business because of its capacity to gather and examine data from its cars. Tesla is able to create new solutions that are suited to the demands of its customers and provide more individualized coverage because to the insightful information this data offers about driving patterns and behaviors. Additionally, Heaney noted that Tesla insurance can be used to increase the security of Tesla automobiles. By examining information gathered from the insurance program, Tesla is able to pinpoint areas in which its cars and autopilot system need to be improved. For Tesla owners, this may result in a safer and more effective driving experience, which is essential to the long-term viability of the business. All things considered, Tasha Keeney's observations about Tesla insurance demonstrate the program's enormous potential as a source of income and a means of enhancing car safety. Tesla is in a strong position to upend the conventional insurance industry and provide its clients with more individualized and efficient coverage as it grows its insurance portfolio and gathers more data from its cars. Due to its distinct posture to capture a sizable portion of that market, Tesla will be very challenging to compete with. It's important to remember that one of my favorite investing strategies is to just dollar cost average Tesla. If the price drops by 5 or 10%, I'll keep purchasing more shares. This is because, in my opinion, Tesla still has a lot of space for growth and innovation. Before I go over the most recent events that you might have missed, we still have amazing news. Despite what you may have read or heard from the media, Tesla demand is still high. Many skeptics believe that if Elon were to take over as CEO of Twitter, Tesla's reputation would suffer. But after listening to Elon's remarks, they should feel more at ease than ever. Elon claims that the most frequent query from investors has been about demand. To ease that concern, I would like to report that January has seen the highest orders of the year thus far. That has always been our objective at Tesla, so I'm glad we can keep making cars that are affordable for as many people as possible. These pricing adjustments are important for the average customer since, in my opinion, a considerable portion of the population wants to buy a Tesla car, but is unable to do so. Despite the auto industry's downturn, I believe Tesla will continue to set sales records. Taking everything into account, we're also making great strides in cost control, and we're witnessing a decrease in production costs in Austin and Berlin that is commensurate with the increase in production. Listen to this if you don't trust me. Tesla will therefore keep breaking records in spite of everything. I still intend to buy Tesla stock whenever I can, so please be patient with me, even though it may seem absolutely illogical to think that the same Tesla might quadruple in value in the upcoming year. In addition, even though Cathie Wood has a ridiculous price objective for Tesla over the next 5 to 10 years, she has consistently bought the dip. If Tesla wants to meet its aggressive price goals, it must increase profits while reducing production costs. I think the company is headed in the right direction to achieve both of these objectives, and I also think that many traditional automakers are trying to surpass Tesla because they were previously unsure of its viability. Tasha discussed the most recent advancements and the potential of Tesla. They believe that electric vehicles are the way of the future and that traditional automakers are in danger because they primarily sell gas-powered cars. According to Tasha, two significant developments that might double the value of Tesla's shares are the growth of the company's insurance division and the introduction of a brand new, affordable $25,000 Tesla. With plans to expand to 45 states by the end of 2023, Tesla Insurance may provide the business with a sizable portion of the $300 billion U.S. auto insurance industry. Since there are still chances for innovation and expansion, she supports dollar cost averaging into Tesla stock. She adds that despite some concerns about demand, Elon Musk has reported strong order numbers thus far in January. Tasha believes that Tesla will continue to shatter sales records and that the company is headed in the correct direction to increase profits and reduce expenses. For now, that's all. Again, immediately subscribe to Wall Street Games if you haven't already. Give this video a huge